Okay, good. I don't know if I just saw Nick busy there, but just finishing off a beer there. I'm not sure if that was the case, but was it?
No.
Nick's like, man, my trade's looking bad. I'm going to have a beer on that one. No, I'm just kidding. So Nick, so pass it on to you. Pass it on to you. I noticed that you're using support and resistance in your trading. Are you just price action guy and don't use a lot of indicators when you look at trading opportunities?
Yeah, I never use indicators. Look, I've got nothing against indicators. I know they work. It's just for me, I just like to keep my charts clean. It's just really simple. Support resistance areas. I draw them up and I trade between them. I don't even really use candlestick analysis that much. I kind of used to, but I've moved more away from it. It's just as soon as something touches a resistance area, I'll sell it and I'll target the support area. Sometimes it doesn't work out. Doesn't really matter. It works out most of the time. And even if it doesn't work out most of the time, let's say it works out 40% of the time, my risk to reward ratio is always above 2. So even if it works out 40% of the time, I'm making profit. And in crypto, it's just so simple. Like in crypto, when a resistance area is hit, it usually reverses. Unless you're in like a complete bullish market, like at the start of 2021, when everything was super bullish. Then at that time, you just buy everything and you don't sell. You just buy and you just keep buying.
It's easy. It's easy to make money in the bullish market, right? Just keep buying. I mean, that's why there was so many traders in crypto. It was actually quite amazing because my son got involved back in 2017 with me. I got involved in 2015 with cryptos, but it just seemed so easy. Look, we had that bearish market for about a year and a bit. But other than that, it was when you're in a bullish run, in a very strong bullish trend, it's easy to make money because you just keep buying on the dips. Every time the market dips, you keep buying. And even if you don't even buy on the dips, you just hold it until the market's in profit. It's going to be strong bullish, right?
So maybe unless you're. Oh, sorry, you go ahead.
No, you carry on, Nick.
I was just going to say, like, it still requires some level of discipline because a lot of people just. They'll buy, it'll dip, and then they'll just sell. They'll panic sell, get out of the market. It still requires some level of discipline. I do kind of think that if you were to give just a complete newbie $1 million and a bull market, they'll still screw it up because they'll buy just the crappiest coin. They'll be up 100 times. They'll hold it until it goes back down to zero because greed takes over, emotions take over. And that kind of screw it up. You still need the discipline to be able to take profit when something goes up. In our whole team, if something's up 100%, we take out our initial deposit. So not initial deposit, our initial entry. So if we put in let's say 10,000 into a trade, it's up 100%. We're at 20,000. We'll take the 10,000 out, get out, and now what we've put into the trade, we've taken out, and all that's left is profit, and we can let it run. At that point, you're not really losing anything if it goes down. Sure. A lot of people still don't take profit. A lot of people, they're up 10 times, 50 times, and they'll just wait for it to drop back down to below zero before they take their money out. It's craziness. But there's lack of discipline.
Unless they have the and my son tells me that a few times, Dad, why haven't you taken your money? And it's because I've got the belief that Ethereum, Bitcoin has still got high values you're going to go to. So what I'm doing is I'm just building up my portfolio. Every time the market goes ahead and dips, throw in a bit more. Dips, throw a little bit more of that. So you're building up the portfolio every month. You're just adding more to the portfolio with still that target. We spoke about 88-wave structure. 88,000 for Bitcoin is still a factor. It's still a fifth wave target that price is going to look to go to. And if it goes there, we're going to see Ethereum actually go to a price level of 5,800. And so these levels that are still out there that still need to be hit, and with the cryptos being still actively traded today, even though we haven't seen a lot of movement over the last the last 8 months, it's still that upside move that we're looking for Bitcoin to rally to. So I agree with you. There is those two types of traders. One that's saying, hey, I'm just going to add. The other one is I'm getting in and then I'm not taking my profit, and then the market goes against, and then they're like, oh, now I have to get out and look for a better price. All they're doing is just losing. They're just going backwards.
Yeah, exactly.
So both Marty and Lady, what do you have with your charts when you go ahead and look at technical analysis and that? Because we're both technical traders. Are you also just a price action type trader, or something similar to Nick, or more leaning towards what Billy does with a lot of indicators? What is your approach to trading?
So I don't really use indicators. Again, I think it's very much like personal preference for me. I just keep it nice and simple with support and resistance areas. Occasionally use trend lines, but again, it could just be I want a little bit of something extra in there, so I'll throw in a trend line. But generally speaking, it's just support and resistance. I use because I'm more fundamental on the fundamental analysis side of things. So I will use fundamental analysis to decide if I want to invest in a project, and then I use technical analysis to manage my trades, get a good entry point, take profit, and yeah.
All right. Well, that sounds it sounds clean and simple, and that's what you need. I had a trade. I used to be on a trading floor back in 2000, and I used to have a lot of traders that come up to me and they say, "Hey, take a look at this trade," and I'm like, I cannot see squat what's going on that chart. I mean, there's so many indicators on there. I don't know if we're buying or selling. It's like, let me see a candle, just one candle, please. So getting a clean chart and having it clean so you can understand and make decisions easy and quickly, it's good. Now, I appreciate some traders need some indicators to get that extra confirmation, but having too much is definitely going to be a problem. Now, Marty, do you use indicators, or did I just...
I do use indicators. However, I will say this. You can have the fanciest indicators in the world. They will tell you nothing unless you know your simple basics, support and resistance. The best traders I know, and the ones I learned from the most, they taught me how to trade based on price action and those levels. And I am a level to level trader. I don't go too far into the future. I don't predict in a year's time, 2 years' time, or whatever. And in fairness, I always say this as well, even the current price of any asset, Bitcoin, you name it, is irrelevant for me. It doesn't matter whether Bitcoin is 40,000 or 100,000. It is what it's going to do next, what level it is going to move from to. So you can have, and I do like my indicators because I use them mostly for like quick scalps, or longer trade. Depends which indicator I use. However, without basics, every other indicator is just useless.
Yeah. So on that subject, with regards to not worrying about where Bitcoin's going or what the price is in the future, isn't it important to know directional bias? And directional bias is determined by turning points of the market. And let me just bring Elliott wave into play. Elliott wave has a 5-wave structure that creates this impulsive wave, which creates another larger wave. But now, and I've just seen my camera just gone out, so let me go ahead and get that right. My apologies for that. So Elliott wave's got this 5-wave structure. What Elliott wave's great at doing is identifying turning points in the market. So whether you're a scalper or a trend trader or just an intraday short-term trader, it doesn't really matter. What you do need to know about is where the market's going to turn, because if you're going to be buying a support level, you at least want to know that you got it at the turning point of a larger swing. And if you're buying it at the larger swing and the turning point, and you get your first entry wrong, and you do something like Billy, where he goes in and uses cost averaging, you can feel a little bit more comfortable about your cost averaging, knowing that, hey, I picked the right direction. The market's just trying to figure out where that sweet spot is before it turns around and moves towards your next target. So knowing the market's turning points helps traders become more successful in trading, because at least it gets them in the right direction, midterm, long-term, short-term, whatever they're trading. Would you not agree there, Marty?
Sorry, could you repeat that? Because I couldn't hear you.
Oh, not a problem. So I'm saying that, and I used Elliott wave as a sort of an indication, right, of turning points in the market, where Elliott wave creates these turning points in the market. And so looking at trading, when you're looking at trading, it doesn't matter if you're short-term swing trader, intraday trader. What's important about trading is identifying directional buyers, knowing where the market's going to go in the midterm. So even if you're trading short-term and you're starting to, let's say, buy the market at a certain level at support, at least if you're using like a cost averaging trading approach, you know that you've got the right direction. You're just waiting for the sweet spot to find its way, and then it's going to take off towards that target. So identifying big turning points in the market is good when it comes
100%.
to any type of trader, right?
100%, yes.
Okay.
I mean, you could totally be bullish in the long term, despite shorter term bearish, and you can still ladder in your buys. And when you understand the direction of the market moves in waves, and knowing this, you won't panic then when you understand that there are constantly up and down moves, and when you have bought something at whatever level X, it dropped a little bit, you didn't went all in at the start, you were laddering your buys, because in the long term outlook, you know that the actual direction is going to be to the upside. You're safe, and you're actually going to make a lot more money if you were just buy it at a price. So DCAing, dollar cost averaging, down it is.
All right, excellent.
100%.
Well, fantastic.
And understanding the market direction, yes.
Yes, fantastic. Okay, good, fantastic. Well, thank you. I appreciate that.